This is the briefing for Friday, July 14th. I want to start today with just a brief look at what happened in terms of the intermarket divergences with the indices. And I want to point something out here. And then I want to cover some things that I covered in last night's briefing as well. This is the spiders, the Qs, and the Russell and the IWM. Now, if you can see pretty clearly, right at the open, the Russell signaled a down day today. Now, typically, you would look at this and think, well, those are the small caps and mid caps, and they're probably probably just going to move lower on their own. This is the tech stocks, and this is the S&Ps. So basically, the tech stocks followed along pretty nicely, and so did the S&Ps. Now, every once in a while, and I've noticed that especially it happens with the Dow Transports and the Russell, if they start to turn down together, that typically signals the potential for a pretty good move in terms of a downside move. Now, I want to point out, if you can see that the rally that we've had has been pretty nice rally, pretty substantial rally. Now, I want to go back. This goes back to July 7th, this candle right here where it started to close the gap. Now, keep in mind, these are 60-minute candles. So this is July 7th when it started to close the gap. And if we go back to, let me go to the spiders here. This is July 7th where the spiders started to close the gap, but then it reversed on the 7th completely and then started, and then over the next couple days started this move higher. The Russell, in the same regard, this was the 7th. It went higher, closed the gap, had a shorter move to the downside, and then on the 10th just absolutely took off, and it took off ever since then. So I paid attention today when I saw this move down in the Russell, and then this rotation back up again. This is going to be very, very important for Monday's trading. Now you can see the buying tail that came in right here. This basically stopped the Russell from completely closing this gap and potentially trading lower and dragging the other indices with them. This low in the Russell on Monday will be very important. That's the 190 area, and that is a very important key reference area in terms of the Russell, which I'll get to a little bit later. Now, certainly the spiders did not follow through as to the degree that the Russell did, and the Qs followed through fairly nicely, but not to the degree that happened again. So it's going to be interesting to see if the Russell is now signaling the potential for something greater in degree of time and price to the downside. Now, we finished the day yesterday in an overbought condition, and basically you can see here for the last several days we've been overbought and basically been just hugging right around this overbought extreme. The same thing with the NASDAQ. Now, yesterday I said that basically the market can stay overbought or oversold longer than we can stay solvent, and certainly being slightly overbought as the market was did not preclude the market from going higher. But we have to anticipate also that markets don't just run in a straight line. They run and pause and run and pause. So typically we'll get a run and some type of a pause. And then, as you can see here, there's a run, a slight pause, a run, a pause, a run. And if this is a pause, then potentially it is complete, and we should see the indices begin another move back to the upside. Watching, of course, what happens with the Russell in Monday's trading. Now, this could be just a little bit greater degree time and price move in the Russell, and we could see higher prices. Trading much above 192 in the Russell would suggest that this long-range candle is going to get retraced. Trading below the low for today, 190, is going to suggest that this is developing into something greater in degree of time and price in terms of potentially all of the indices. Interestingly enough, I also pointed out yesterday that there was a slight divergence in market breadth with the NYSE and the spiders, with the NASDAQ and the Qs, and with the Russell and the IWM. And you can see that basically, and that divergence was so slight, I really didn't give a lot of credence to it, at least at this point in time. But in today's trading at the open, you can see we had a higher high, and breadth was absolutely collapsing. It was negative about 1,500 shares in the NYSE. In the NASDAQ, it was the same thing. You can see that we opened up higher in the NASDAQ, and we were about 1,700 shares negative, and the same thing in the Russell. Russell did not open up higher, but the breadth in the Russell opened up about negative 1,400 shares negative. That was a pretty clear indication, along with this move in the Russell, that potentially we were going to see some type of a down day today. Now, one day does not a trend make, so it's going to be interesting to analyze on Monday what happens with this pause. Is this just a one-day pause to work off the overbought condition that we saw for the last couple days, or is this something greater in degree of time and price? Now, it is interesting that we worked off this overbought condition almost completely in today's trading and reached a point of being slightly oversold. So that is typically a sign that suggests that potentially this is a one-day wonder, and this potentially could be complete. And I have to qualify once again, it does not preclude the indices from moving lower in Monday's trading. Now, the financials had some good earnings today, and we've got more earnings coming out on Monday. So it's going to be important to see what happens with earnings and see what impact it has on the development of price. Now, in terms of where we are, you can see this area, this 445 area in the spiders is really very important support. We did have a breakout. We had follow through in yesterday's trading and a little bit of follow through today on a pretty big divergence in breadth. Volume was very light today, so volume certainly was not coming into the downside, nor was it supporting the upside as well. 52-week highs minus 52-week lows declined somewhat. It had expanded pretty nicely. If I remember from last night's briefing, it was about 300 and some odd, 350 shares positive, which is something we haven't seen in quite some time. Looking back here, right here, I guess back in February, we were at a point of about 376, almost 400 shares positive. So watch this area, 445, very important support area in terms of the spiders. In the NASDAQ, you can see breadth absolutely collapsed also. Volume ticked up slightly, but really nothing to write home about. And you can see that this area right here, I keep losing my trend line here, 373 is the next downside support. And of course, in terms of resistance, the previous day's high is important resistance as well in the indices. And then looking at the Russell, you can see the Russell came back, and this is that 190 area tested, and then buying came in and drove it right back up. I got to say, I was watching this pretty carefully today, especially this morning, in the earlier part of the morning. And if 190 had broken in the Russell, I really kind of feel like it would have accelerated the selling potentially in the other indices. But it didn't, and buyers came in and saw that it was at support and just absolutely drove it up. That's a pretty nice buying tail that came in the Russell. Now, in last night's briefing, I talked about the fact that the indices appeared to be strengthening, and they were. You can see that we had breadth that was fairly strong in the Russell, in the NASDAQ as well for several days there. And the same thing with the NYSE. You can see breadth was fairly strong, and it held strong. So it was supporting the breakout in price. Now, looking at where we are, this is the charts on the percentage of stocks above the 50-day moving average and percentage above the 200-day moving average. And you can see what was happening for the past several weeks. And this is basically this week, this breakout right here that we saw for the last 3 days of trading in the S&Ps, and you can see that it expanded nicely. I think we were at about 85% above their 50-day moving average at the close yesterday, and we were at about 69-70% of the S&P above their 200-day moving average at the close yesterday. Now, we had that tick down a little bit in today's trading, but this was very supportive of the move that we've seen over the last several days. This is the NASDAQ percent 50% of stocks 50-day above the 50-day moving average and the 200-day moving average, and you can see the same thing. This is a really nice trend of strengthening of overall stocks within the indices themselves, and the same thing with the 200-day moving average. And you can see the move here, this move here tested this trend line, and then of course as it started to move higher, as price started to move higher, you can see that we had a little bit of a down dip, but the percentage of stocks moving above the 50-day moving average was increasing, suggesting that we were going to see potentially a breakout, and I think I covered that in one of the briefings. Same thing with the 200-day moving average, and for the Russell it was basically the same thing. Here, this was the 190 area right through here, very important area, and right there at that day you can see that it was strengthening. It was strengthening prior to the breakout, and then of course we had the breakout, reached almost 75% above the 50-day moving average and well above 54% for the 200-day moving average. Once again, a little bit of tick down. I'm not concerned about that. I think the key for Monday is going to be what happens here with the Russell. Really, if this 190 area is traded through, I think that's going to weigh on the other indices. If it holds, if we trade above 192, and then of course move back to the upside, I think we're back off to the races. And this was just a run, pause, run, pause, run, pause, run, pause, run, pause, run, pause situation. And we're going to be taking out the highs of today in the S&Ps and the NASDAQ, and of course the high in the Russell as well. Watch what happens on Monday, especially if we start to trade higher. We need to see breadth recovering. And of course, if we do trade lower, what's going to be important is what happens with volume. Now, volume, you can see volume was very low in today's trading. A little bit surprised at that. A little bit of a tick up in NASDAQ volume, but it really was not impulsive to the downside. So I have to go with the fact that I'm cautious to the downside, but certainly the trend in price and the internals are beginning to complement the rise in price and support that price development. Hopefully that won't change on Monday, but we'll review it in Monday's briefing. Have a great weekend. I'll pick this back up Monday for subscribers.